Guys, welcome to another episode of Recruitment Entrepreneurs by Recruit CRM, and we have Paul Breloff with us. Paul is a pretty interesting entrepreneur. He's an American who's sitting in somewhere in Africa. He's going to tell us more. Who's running recruitment businesses across India, Africa, and the globe. And so the floor is yours, Paul. Tell us a little bit about yourself and your business.
Yeah, Sean, thanks for having us. So I'm actually in Nairobi, which is in Kenya, in Eastern Africa. Kenya's on the eastern coast of Africa. I've had a crazy journey to get here that mostly involves non-recruiting. So I started in advertising. I was a corporate lawyer. I was briefly a consultant. Spent most of my career in microfinance and fintech. Most recently running an investment fund.
If we go way behind, like let's start with where you were born, right? Like how did you pop out into this world and what got you to your first job in the first?
Oh, Sean, how much time do you have? Yeah, sure. So I'm born in Upper Peninsula, Michigan. That doesn't come out very often. Grew up in Western New York State in a small kind of blue collar factory town, relatively small. And had a great childhood, great family, great brothers, lots of sports. I think sports were much more the focus than academics and business at that point. Went to college in Massachusetts and studied philosophy and psychology. I spurned my initial goal of becoming a doctor, just kind of falling in love with the ideas and human behavior and why people do the things they do and man's search for meaning. And that led me on a winding career path, kind of looking for different ways to apply these intellectual interests to connect more with business impact. And I think I've always been drawn to business models that can spur access to opportunity. And that's been a kind of like common thread through a lot of things that I've done. Most of my career I spent in actual financial inclusion, which is spent a few years in microfinance, set up an investment fund, investing in fintech startups around the world. So invested in almost 30 companies, mostly in emerging markets. And it was through that really kind of stumbled on this recruiting challenge. And we kept giving money to companies, and their biggest problem would become people. Yeah. And I was surprised at how often we were missing numbers, missing impact, slowing down because people just couldn't find the right talent to fill the gaps.
And so put this on a timeline for us, right? When did you roughly graduate from school? Like obviously this discloses your age, but
I have no problem with my age. I'm getting old. I've got the gray hair. I graduated college in 2000, so long time ago.
So and then 2000. What do you do right after college? What's your
first job was advertising. So okay. I spent three years in advertising in Chicago. I have no idea why or how I picked advertising. I think they just had a really good interview and sell week, and it seemed fun.
And it's like the Mad Men, Don Draper sort of stuff, or like
it was a few years after. I can only imagine what it would have been like to be in the heyday of 50s, 60s advertising. But you'd be surprised at how much remained the same. So my job was I was an account executive, which means you're kind of like the mission control for ad making, for the creative, for the research and planning, for the media buying, and you're always just trying to make the client happy. I really enjoyed parts of it. There's some interesting business strategy. There's some interesting psychology, interesting development of client stakeholder management, but ultimately didn't find enough day-to-day meaning and purpose behind the work, which I think is something that people often complain about in advertising.
And so you worked in advertising till like 2003 or 4, like based on and then what was the next gig?
I mean, the next gig was backpacking in Southeast Asia for many months. I submitted some applications to law school and jetted off and just kind of like bummed around and did the classic Thailand, Vietnam, Cambodia thing for a while. Awesome. But the next professional jump was law school. Okay. And so spent 3 years spending way too much money getting a law degree that I have only used for about 11 months.
So you did practice law right after law school?
I did. Yeah.
And was this at one of those traditional big law firms sort of thing?
Big law firm. Really, I mean, a really wonderful law firm. Still a lot of close friends, and they've been wonderfully generous with pro bono work for various initiatives I've worked on over the years. So I actually had a great experience, and I loved being a lawyer.
And so
I think I loved the promise of becoming a business executive in a microfinance firm even more. I had an experience of working at a really high growth microfinance institution in India very briefly, as like almost like a summer internship, and was convinced that this was going to be a rocket ship, which it was. It eventually IPO'd, and had a unique opportunity to kind of hop on the rocket ship relatively early in the trajectory and do a lot of things that I frankly had no business doing, but wonderful growth and professional experience.
And Paul, back into this, because this is interesting, right? We're spending more time than we normally do in your story, because it's very interesting how you do all of this and end up in recruitment. So right after law school, right, you were a lawyer for like a year. And how did you, and was this like a traditional New York law firm or Chicago?
Chicago headquartered, but yeah, I mean, they're all more similar than different.
And like, how do you transition from that into microfinance? Like I don't think,
yeah,
I mean, lawyers, right?
I had been developing up a bit of domain understanding during law school. I had helped create a community development bank that was focused on our local community in New Haven, Connecticut. And that exposed me to the role of banking and financial services for economic development generally. So I had done a lot of, I'd written a big paper on financing microfinance and generally completely independent of law, had chased down connections to try to have a work opportunity. So I had met a guy when I was at McKinsey who had founded this microfinance institution and just kind of convinced him to let me come on for free. And so spent the summer working for free with this guy. Wow. and his institution. It was surprisingly hard to convince him to take me for free. I remember him saying, I hate interns. I'm not, I'll let you come, but I'm not going to pay you. I'm not going to give you an office space. I'm not going to give you a computer. I'll open the door for a week. And if you figure out something useful to do, great. Otherwise, bugger off. And
that's crazy.
So I basically just volunteered. Initially, I would just make people's PowerPoint slides. And turned out that was a great way to get behind the scenes in terms of like, how's this business work? What are the strategic questions they're asking? And it eventually led to me playing a pretty significant role helping them raise their initial round of VC money, which then led to the actual full-time move.
Yeah, and then you're saying you moved out of this company to go to a fund that was funding microfinance companies, right?
I moved out of this company, actually had a crazy experience, essentially getting caught up in a bunch of politics at that company, got fired in a not very fun way from that company, and then spent a couple of years doing a really great set of projects as an independent consultant. I was working with a variety of my dream organizations in different ways, Root Capital, Shell Foundation, the World Bank, and eventually landed at a place called Axion, which gave me some leeway to set up this fund. I had spotted this gap in early stage investments and set up something called Axion Venture Lab that let us make small seed investments in companies as a way to spur more innovation in technology and how technology could solve problems for low-income consumers, small businesses around the world for financial services. And so that was a great experience.
I'm not sure if I'm mixing this up, but isn't Axiom like on-demand legal talent sort of company?
Yeah, there's something like that. Totally different. It's Axion, ACCION.org. If anyone wants to go look them up and give money. Yeah, I think there's a group called Axiom that does legal staffing out of New York or something.
And so you go to this now you go to this fund, right? So did you participate in raising the fund, or were you like?
I started the fund, so I conceptualized the fund. We didn't raise external money. Essentially, I raised money from Axion. So Axion is a multi-$100 million microfinance investment fund that created this spin out called Venture Lab. That I led.
Like, was the strategy deploying like sub $1 million into like these tiny companies, or like what?
Yeah, we would be the first institutional money in. We typically invest somewhere between $100,000 to $500,000, and then get pretty hands-on. Essentially, viewed our role as shepherding the company, or shepherding is the wrong word, but supporting the company as best we can to get to a Series A, and then We'd often stay on the board and stay involved, but the goal was really to solve this kind of pioneer gap, this, after friends and family money, but before, mainstream funds are willing to invest.
And finance is super hard in the beginning because you need to find capital and you need to find a model with which you can lend capital out and actually get it back. And it's super hard to think of companies doing it. And so how many years did you do that?
About 5.5, 6 years. And
that's all the way through like 2012, 13.
No, this was starting in 2011, going till about 2016.
Oh, wow. Okay.
And so this was kind of the primary, and I loved it. It was great. It was great work. I had a great team. I think I was bit a little bit by the entrepreneurial bug. You spend enough time talking to entrepreneurs and trying to find ways to add value, and you haven't done it yourself. You start to feel a little bit like a poser, and just started to get more interested in this talent problem. And it wasn't just recruiting. I think recruiting was maybe the primary pain point that brought me in, but generally speaking, how people get jobs, how people find vocations that mean something to them, just the ways in which these matching processes are broken for a lot of markets.
The founding story then, like when did you start the recruitment business? Did you start it solo? Did you have a co-founder?
I've got two amazing co-founders. Essentially, it started with a lot of probably complaints over drinks between me and my co-founder, Simon, who was doing clean energy investing, about how bad this talent challenge is and why doesn't someone go solve this, and what are some ways we could solve this, et cetera, as a lot of good businesses do. And enough of our friends said, shut up about this and just go do it, or don't, but stop talking our ears off about it. We brought in our third co-founder, Matt, who was a successful Silicon Valley entrepreneur, and more importantly, one of my college roommates. Okay. And he really created a great kind of rounding out of and filling in of blind spots Simon and I had about building a tech company, building a culture, thinking through how to lay the right foundation to actually start companies.
How did you guys finance this? Did you guys just put up a bunch of money you saved up? Did you raise capital? Did you do a seed round? Yeah,
I mean, eventually, two primary avenues. I think initially, of course, there's a period of just problem discovery, exploration, and that, of course, you just kind of do off the side of your desk or commit some of your own time. As we started to build tech and as we started to build team, we initially were fortunate to raise money from a couple of philanthropies that were eager to see this problem addressed for their portfolio companies.
Just to be sure, you set this up as a for-profit company, right?
That's right. Yeah. So it's a for-profit company, but we had a number of companies that were seeing different issues around talent matching and recruitment as a barrier to scale for their impact enterprises. Okay. And they weren't seeing enough service providers able to help and wanted to just kind of seed the existence of these service providers. It wasn't a lot of money, but it was enough to kind of get things moving.
So people seeing now, was it tens of thousands of dollars, hundreds of thousands of dollars?
It was probably in the very low hundreds of thousands. I actually don't remember. We did then a proper seed round of $1 million in it's taking me back, 2017. So kind of late 2017, after we'd been building the business for almost 2 years by that point.
And who led that round? Was it another Silicon Valley type investor?
No, we primarily focused on local firms and angels and friends and family. And I think at that stage we were still in such a process of discovering which business model we wanted to build that we didn't focus on the traditional suspects. Instead, tried to focus on building a set of friends and stakeholders and partners who wanted to be on the journey and could help in various ways and would kind of be with us as we figured that out.
Was this like a traditional early stage round where you sell 20 to 30% of your company, but no board seats and stuff like that?
That's right. It was less than, we sold less than that, but yeah, it was roughly in that direction.
10 to 20 points. And,
that's right.
And this was an equity round though, right? So you priced the company
No, it's, both rounds we've done have been as notes, as convertible notes.
Oh, and I think you guys haven't done a Series A yet, so you technically don't have any shareholders, right? Because there's still notes.
We do, because the first one converted, so we have some shareholders, but
Okay.
but yes, like we still have a note outstanding.
Got it. It will probably convert when you and again, like, because we're in this conversation, is the goal to raise more rounds of capital and keep,
The
you know,
goal is very much to build an impactful, big, profitable business. And I think that to the extent that venture capital or other forms of investment can help us unlock that, great, let's do it. But I don't think we're targeting. I think the focus right now, we see, I mean, you know, recruiting business as well. You have a lot of people on this conversation and podcast. There's ways to run these businesses, even businesses grounded in tech, that can be more lean and that can be more cash flow focused. I think we're starting to veer more towards profits and cash flow than the never-ending treadmill of rounds of capital.
yeah, but someone here who's running a software startup making cash flows. So we're super big every time we hear people move into the profitability game, because your outlook towards business, building your business, changes when you think about what's the EBITDA you're going to do this year versus how much are we burning and what's our runway.
Yep.
The mindset, it's a mindset change, right?
Exactly.
Harder,
Exactly.
but it's a lot more fulfilling long term.
Yeah. And you know, I think it's one of the silver linings of COVID is the way it has reoriented the entrepreneurial community to make profits, build businesses that make profits, as opposed to some vanity metric around users or noise or whatever that can obscure really bad unit economics and an underlying bad business for a long time.
It's like a recruitment business that's not focused on the amount of fees you're generating every year versus the number of placements or the number of interviews, which isn't, with their nice metrics and their important KPIs, but that's not the bottom line.
Yeah.
And to get into context, right? Like, have you guys broken the $1 million a year revenue run rate any of the years, or you're still working?
Yeah. I think a few years ago now.
Yeah. And so how long did it take from the time you launched to hit that run rate?
Yeah, I guess it took about 2 or 3 years. I'm trying to remember now, but the first year, of course, you're talking odds and end revenue. It was, I mean, I can't even, it was probably under $50,000 in revenue. And then I think the first few years we were, the second and third year, I think it was probably the third year. I think second year we did maybe a few 100,000. And then I think it was the third year that we broke a million. So we saw pretty robust growth. And I think, we have experimented with different business models, I don't think we've gotten into it yet, but Shortlist, we do have a recruitment business that is more of a traditional search business, but we then also have a tech-powered side of the shop that is focused more on large-scale mass recruitment campaigns, graduate recruitment, internship programs.
So how do companies pay for the tech? Do they just give you like X?
We generally think about it more at a level of programs that we run. So it's less a business of like, someone signs up on a website, gives us a credit card, and then there's recurring monthly revenues, and more looking at what someone is trying to solve. So Microsoft might be trying to just drive much higher adoption of their internship programs across Africa. And then so our tech will be what facilitates us reaching out to tens or hundreds of thousands of young people. We bring them through the platform, and we provide a bit of human touch to make sure that these folks are getting into the programs, getting placed. And we do that across a number of different use cases, many of them increasingly around youth employment, jobs and livelihood programs that are trying to get people to either get directly placed into work experiences or channeled into upskilling or training programs and then matched into companies. And I think our platform, we found a really interesting niche and use case around how to bring these partnerships together.
What does the business look like today? How many people do you have working?
We're a little over 80 people, 80 people. We are split between 3 offices, although as with everyone, who knows what offices mean anymore. But we have a tech team based in Hyderabad. We've got a more of a delivery team in Mumbai, focused largely on India clients, but increasingly on global clients doing work across Africa, Europe. We also have a sizable team, about 20, 25 people in Nairobi as well. And so, and yeah, I'll stop there.
And how's your team split across the two businesses, across your traditional search business or recruitment business where you charge a 15, 20, 25% fee on placements versus the tech program-based business? How's
Yeah, I mean, not surprisingly, the search business is a little more headcount intensive. So it's probably 60, 70% search team, as opposed to the revenue split being closer to 50-50.
Wow.
And then we have a small number of people that are focused more on what we consider kind of like our growth experiments. We have an SME focused, almost like a light touch applicant tracking system paired to local talent community product called Shortlist Connect. And then we also have an ed tech offering focused on helping young professionals make job transitions and career transitions. And so like we've got a few people kind of developing those as well.
So your revenue split half and half between search and recruit and technology.
Talent drives, yeah, or tech, yeah.
Or the tech powered play, right? But your headcount is obviously more heavy towards the search side. But would it be accurate to say that the cost of both the businesses are probably similar because the cost of engineering tends to be higher than search? Or,
roughly, yeah.
Or is one of
I
the
think that's right.
more profitable? Is that the case?
I think that what you'll generally see, and I think this is true in our case too, is that tech businesses are more profitable on a run rate, but it gets a little muddy when you think about acquisition and customer acquisition and how you allocate tech expenses. I think both businesses, though, and you probably see this with a lot of your clients, if you run a search business well, it can present very, very good margins. And I think it's probably never going to be able to compete all the way with a pure tech play. But I think we've found that both businesses meet our criteria in terms of profitability and impact. Gets us working with companies and on issues that we really want to tackle.
And what's the game plan for the next 2, 3, 5 years, whatever timeline you think of? Like,
yeah.
What do you generally make your plans in? Is it like
the focus is much more on scale and quality scale. And I think that we're now more confident than ever that these two business lines, which are highly interrelated and synergistic in terms of what we're doing, are really where we want to start building. And so there's a number of initiatives that we're focused on in terms of how we ramp up the quality of the training, the client experience, the outcomes we're able to deliver, but very much building the systems for scale. And that means making investments in software and figuring out the structures and training and a number of other areas.
And especially in search, right? Because this is the Recruitment Entrepreneurs podcast, but especially in search, talent is very important. The people that work for you, your consultants and your recruiters who are actually
absolutely
resources, we're making
the most important thing. Yeah.
And the business is essentially, unlike maybe an engineering business and a developer leaves, you can always replace them and they can learn the code and figure it out. In search, the consultant itself is essentially a cash generating machine if they're really good. So how do you think of, when you think about compensation and base compensation versus commission compensation, how do you guys traditionally structure consultant compensation? How do you think about it?
To be very honest, that's one of the things we've got to figure out this year. I think that we have traditionally built a team and a compensation model that looks a little bit more like a tech startup or a SaaS business, where people are more heavily incentivized around, first off, there's a heavy fixed comp component, and then we have different sales incentives and performance incentives and things like that. I think we're trying to find the right model that leans more heavily on incentives as a way to drive entrepreneurialism. Because I think we want to build a practice that is focused on for entrepreneurs by entrepreneurs. And part of that means that we increasingly have a team that has a lot of incentives to go out and find areas of interest, build client relationships of value, serve those clients, and make money doing that. So we're trying to figure out the right model, and it's a great process of where we've started to explore a lot more of the global models. How do the Korn Ferrys, Spencer Stuarts do it? How do some of the boutiques do it? So we're getting there.
The biggest companies use might not work for you. It's like the sales company.
Exactly. Yeah.
Salesforce are probably not going to work for CRM, because what we've seen, at least from our end, right, information back to you, is we've seen the most successful firms have a very aggressive compensation policy around. They have a guaranteed draw or salary that a consultant makes. And I'm not talking about people fresh out of college. I'm talking about people that that within a quarter they can start driving cash into your business.
Yep.
A guaranteed draw, but then they don't make any commission till they maybe 2x the draw, because they have to pay for themselves, overhead, and the cost of actual business development. But once they make that 2x of their compensation in commissions, they start getting a percentage, which could anyway be anywhere between 10 points to 30 or 40 points of the placement fee, depending on the market you're in, how hard it is to make placements, and so on.
Yep.
And in that kind of situation, it almost becomes unfavorable for a really good consultant to quit and start their own search practice, because it's too much of a pain to do all this other stuff that the company and the brand are already doing for you.
That's right.
You're making you're making 30-35% of whatever you're collecting, but you don't have to do any of the extra work around business development or brand building or team management or managing payroll. And
exactly.
It still leaves a lot of juice for the company to drive cash flows, because that's obviously what everyone wants.
Yep.
But that's
right.
So few closing questions out, right? Did you guys ever get close to like running out of money, or did you always have funding, so it was pretty planned? And
one of the things that I take pride in is no, we have not ever come close to running out of money. I think that perhaps it's the benefit of starting this company when you're almost in your 40s.
Yep.
So it's like you've been around the block a couple times, been there, done that, seen the issues. I think we've tried to be really careful to smooth the rough edges of a typical startup and avoid the highs and lows. One of the phrases we have is let's try to be thermostats, not thermometers. Let's kind of generally try to set the level and stay there, rather than like riding high when things are hot and crashing when things are low. And I think that applies to how we manage our finances as well. So luckily we've been fortunate there.
And if I had to ask you, like, one of the things that you expected to happen when you started this business that didn't happen, what would that be?
Many things. I mean, I think that everyone tells you entrepreneurship's about pivots and changes, but then when you start your business, you always, if you're a first-time entrepreneur, like technically I was, even though it started other things, you're still surprised when your perfect reality narrative of what's going to happen doesn't happen. So I think broadly speaking, like one example is just when we started, we thought we would be able to solve more of the problem of recruiting through tech and data than we've been able to. I think a lot of people probably encounter similar things to us. At the end of the day, this is a really human business. And if there are things the machine can't do yet. And I'm not sure we'll ever be able to do. 5 years ago, I would have said executive search ripe to get disrupted. It's going to disappear in a decade. I don't think so. It's too.
I think you're not even new. You're not even new to the party, because I think when Indeed and Monster were coming out in the 1990s, during the peak of the .com bubble, it was like, hey, all these recruitment businesses, all these brokers, real estate brokers, car dealerships, all gone. They'll be gone in 5 years, because if someone wants a job, they go to monster.com and they become CEO of XYZ. But it didn't happen, and it's structurally not. It's like investment banking, right? Like you're always going to have investment bankers do mergers and acquisitions, because a company.
You're always going to have management consultants telling you how to run your strategy, and it's like good luck. And I think that I think there's a misunderstanding in many times about what recruitment is. I think there's an image of you're either just kind of like mindlessly looking for keywords in LinkedIn profiles, not true, or you're sitting back having a coffee at a nice 5-star hotel, like saying, oh, I've got the perfect person for you, and then like mentally filing your Rolodex and I'm like, that is not how this works. It is a strategic process of understanding the client business challenge and applying a thoughtful strategic process to find the right person and find that overlap between a person's superpowers, the company's need, and this person's dream for their future.
And the challenge is all the data is not quantitative, right? Because at the end
exactly.
of the day, whether you're selling a company, whether you're getting someone to buy a house or getting someone to hire talent, it's not just about data points and linking data points.
That's right.
You have to know what the person wants, what the person on the company side wants, talk to both of them, figure out a middle ground.
Exactly.
It's not a formula, right? No one's putting up a bid that says, hey, I'm looking for a job. My bid is I'll work for 130 grand. Boom.
Right.
And then
right.
someone picks the lowest bid. It just doesn't happen. But finishing up, right? Like now these are closing questions because we've had a great interview where you've shared a lot of personal information. What's the hardest part about running this business? What's the crappiest part about doing this?
I genuinely really like it. I think if there's one challenge that I suspect entrepreneurs, and I certainly feel, it's the need for focus paired against the desire for the shiny new toy.
No, but that's just generic, right? I'll give you an example, right? I run a pure play software company. And the hardest part, or the most frustrating part about my job, is how long it takes to make updates to our software or any software, right? So if we have 20 clients asking for a feature, there's no physical way many times for me to get it in their hands for at least like 3 weeks or a month or 2 months, right? Which is super frustrating because you're just sitting on that and you're waiting for people to write it. So on your side, what's like this one part of running a search firm that frustrates you, right? Or
then if you don't want a broad principle, I mean, to make it really specific and tactical, I think it's anything that I am used to some department, some nameless, faceless department handling at a bigger company.
Yeah.
So, I mean, when it comes down to it, like there's really no backstop on finance matters. I mean, we've had an issue the last month where we can't log into our Bank of America account because nobody has an American cell phone that's operative that lets us get an account. We literally, like I have literally been on many late night calls trying to figure out how to get into our Bank of America account. I keep thinking, gosh, is there not someone else that can do this? Yeah. But I think when you're an entrepreneur, search business, any business, a lot of this stuff, you know, you just like, there's often not a backstop. And I think that's part of the reality of running business. At the same time, there's kind of a fun challenge there of like, you know, responsibility.
And you have to do it the 5th time in 3 months.
Yeah, exactly.
So what Paul doesn't like is doing all of the admin stuff that's not intellectually stimulating and just, you know, boring administrative crap. And so what's advice you'd give your 20-year-old self, Paul?
Easy. Invest in Amazon. 100%.
Yeah.
No, seriously, I would say invest in Amazon, but I would I think it's pick a problem that you're interested in, dive in. It's probably the same advice I'd give to an entrepreneur. I think I have no regrets about my career. I've had a really interesting set of experiences across a lot of sectors, but I also think it would have been really cool to have picked one sector and problem area and thing I want to focus on and really go for it. And I think that particularly at a young age, I think there's such a my 20-year-old self was way more about keeping doors open and terrified of closing doors. And I think I would have tried to push me like, let the doors close. Just continue to like follow your nose on like what keeps being interesting and keep going deeper and deeper. Because the deeper you get, the more you get into the texture of the opportunity, the more value you can create.
And Paul, where are you at in your life right now? Are you married? Are you single? Do you have a kid?
I have a wonderful partner named Rachel, and we are together in Nairobi for as long as we can be. No, life is good over here. We've all I mean, COVID's been a miserable time for many people, and there's been challenges here. But Nairobi's been a really good place to be. And after 2 prior years of doing long distance, New York to Nairobi, Mumbai, where I split my time, it's been wonderful to kind of have the stability and the routine of being in the same place.
What's the game plan for you guys, you and your co-founders? Do you intend to like scale this up into a large business and then sell it, or do you plan to keep running it? And is Paul going to be in Nairobi when he's a 60-year-old man? Like,
we have trouble thinking more than 18 to 24 months into the future. So I do not know. I definitely know the focus right now is continuing to build out a business and a platform that lets us work on these problems and these issues. I mean, we're really passionate about talent and jobs and recruitment and getting the right people in the right roles and helping people find the right jobs for themselves. And we have a lot more work to do. So for now, I think it's continue to focus on how we build out a profitable, successful platform with amazing, inspired, motivated people and with clients we love working with. And then we'll see. But that will keep us busy for at least the next 24 months.
That's brilliant. And there you have it, guys. That was Paul Breloff, and that's Paul's story.